Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 23rd, 2017. I just want to do a quick update of some of the things I'm watching today. We'll spend a lot of time on the broad markets because I've covered that recently and put some static posts up yesterday in my thoughts. So here's a QQQ. I'm starting this video just before the market opens. You can see I wanted to show yesterday's big day. Most of you are aware. We had a 1.52% gain in the Qs. That was the strongest of all the major indices. But like I said, this is a typical reaction. We confirmed that divergent low on the 60-minute chart of QQQ as well as IWM. Small caps had bullish divergence at the lows. You can see there. And SPY almost did, but didn't quite. You can see the divergences were taken out. So that's one factor there that questions how far this bounce will go. And again, as I pointed out yesterday, more importantly, well, there's the open now. You can see we're down about 0.6% in the Qs. So giving back some of that rally. And as I said, basically, based on the outlook of the long-term charts, the long-term charts always take preference over the shorter-term time frames. This is a divergent high here, and everything I talked about, potential buying climax. So because of that, normally I might expect a longer rally on a 60-minute divergent low. That's one of my primary time frames when swing trading. But again, it's in direct contrast with what I'm seeing on the daily chart. So therefore, I didn't expect that bounce to go very far. In fact, from what I put up yesterday, I gave these potential bounce targets here. And you can see that we stopped cold at the R2 level, the R2 resistance, second resistance level. You can see that 60-minute candle. Literally, I think we closed about right on it or close to it. We closed at 143.20. I had it at 143.23. So close enough for government work, and so far we're pulling back. Let's see what happens again. I'm not getting too excited yet, but that's pretty overall bearish if this entire pop gets faded because like I said, I put a lot of a lot of weighting into a 60-minute divergent low, and usually those are good for swing trades like this one that last days, if not weeks, and are measured in several percentage points or more, and that's not been the case so far. So again, let's just see what happens. Semis, I already talked about those yesterday in an update, in the same update I did on the broad markets. We're just dancing right on that uptrend line, sitting there right in the, approaching that apex of the triangle. So we're going to break out one way or the other. You have a downtrend line that probably a lot of eyes are watching, or should be, in my opinion, and you have an uptrend. I'm sorry, there's the downtrend line that forms the triangle, and then you have this uptrend line. So respect a break either way, and I put up charts again on all those. The other things I'm watching, the retailers, I made a mention on the front page in the comment section for those of you that watched the video yesterday on the retail stocks. We had a couple of them report this morning. Express, and that one it's given back some of the pre-market gains, but it's traded as high as 695 in pre-market trading, which accounts for a gain of about 27% above yesterday's close. And AEO traded as high as 1270 so far, and here it is. And again, I wanted to just harp on the daily charts. These are a couple, not just random stocks that I covered in the video. These were some of the ones I pointed out as being bullish because they had those divergent lows that I was looking for. There's a couple that yet haven't put it in. There's a couple that already put in divergent lows and have already rallied. These guys had a lot of meat on the bone because they were putting in divergent lows as they were heading into earnings. And as I stated in the video, there's been a pretty clear pattern of big gaps, post earnings gaps lately, and nearly every one that I cover in the video, it's gone in the direction of for a long position. In other words, they've gapped up considerably. So that's been the trend, and trading's all about recognizing trends. You don't have to just look at charts. That helps, but when you see a clear trend of stocks popping in one direction on earnings, it tells you that there's a shift going on in the demand in that sector. As I said, these stocks were beat down, so there's AEO. Hit a high of 1270 so far. Nice gap up, trading up nicely today. Another one on the radar. We have ANF reporting tomorrow. Let's see, before the market opens. That's Abercrombie and Fitch. And this one, like I said, my preference in the video would be to see another thrust down. Now with Express and AEO blowing it out today, I don't know if we're going to get that another low. We almost had divergence there, but you can see we didn't quite make a lower low. So um, either way, we have close to divergence. We don't have to have that, but not really one that I'd step in front of. If I had a nice divergent low, I might step in front of it. So let's say we gap down tomorrow and then put in a reversal candlestick. This one may offer an objective long entry. So just one to watch. And as again, watch the video. There were quite a few that I covered. And one of the members in the trading room pointed out today the dividend yield on a lot of these stocks, like ANF, for example, is 8.61. And he went through several, he or she went through several of the names, and there's some paying 10, a couple of them paying 10%, even 25%. Now, when you see a stock like with a 25% yield, I think that was Stein Mart. No, maybe not. I'm showing here a 12% dividend. Either way, my point being that when you see dividend yields that are well above the going rate, you can expect some cuts. Again, you could read up on the fundamentals, maybe, maybe not, but for the most part, I usually look at those. I don't buy them purely for the dividend. And if I do, if a stock's yielding 10 or 12%, I say, well, let's look at the fundamentals of the company. And I'm not speaking to the fundamentals of Smart. I haven't looked into it. I actually been 10 plus years since I've been in a Steinmart store and walked in and walked out and wasn't a big fan of them. Not sure if they'll be around in the long run, but let's just say they cut the dividend 50%, then you're still talking a 6% yield. So that's the way you look at it if you're trading these as growth and income trades. And again, a lot of those stocks are setting up nicely. Now, just one quick note back to the broad markets. Let's talk about the move yesterday, if in case it caught anybody by surprise. You know, this is the VXN. As you guys know, I'm putting most of my emphasis or focus, I should say, on the NASDAQ 100, on tech, on the semiconductor stocks. They've led the market up. They've continued to lift it recently. They've held things up. That's been the without a doubt where the most of the strength in this market has been. So let's look at the VXN, which is the Nasdaq volatility index, and you can see a clear trend of it rising. Remember, volatility. A lot of people associate the VIX or volatility index with the stock market going down. And yes, typically the volatility indexes rise when the market drops, but it also means when you see, as we can see here, since early March or sometime in March, we have a clear trend of the VXN rising. And that what I'm getting to is it speaks to yesterday's move. Volatility is swings in prices. It doesn't just mean the market just drops straight down. So when you see volatility start to rise, whether you're trading long or short, you need to expect bigger daily gyrations in the market, and that's exactly what we had yesterday with that 1.5% gain in the Nasdaq and 1% gain in the other indices. So as long as volatility is trending up, um, factor that into your trading, both mentally. You have to factor it into your stops. If you're riding very tight stops on a lot of positions, you're likely to get you have those stops hit in these day-to-day gyrations. And again, that also depends on your particular position, whatever you're trading. So I just wanted to make mention there. And there's another, I did a longer term study of the VXN yesterday, and let me put that chart up in static form. I don't have it ready to go here right now. But it shows that when the VIX usually turns, when you hit these periods of extreme volatility, and what I did is I overlaid a correlation of the NASDAQ composite and the VXN, again, the NASDAQ volatility index, which we're looking at here. And as you would expect, when the VXN spikes, typically the Nasdaq Composite's going down, and you can look at the major peaks, or I should say the troughs in the VXN. When you have these troughs, these bottoms, um, very often there's a direct move where the VXN spikes and the market drops, as you would expect. However, there are a few points in time where both the market and the VXN have been rising. And so what I did there with the correlation, it shows a positive correlation. When that correlation hits extremes, that's usually where you have some pretty big drops. That's where the biggest drops in the market have come from. So in other words, when volatility starts to rise, yet the market really doesn't give up the ghost. As you know, the Qs have moved down recently, but that's hardly anything, and it's not commensurate with this divergence. So again, you're seeing volatility, especially in the Nasdaq, trending up, clearly higher as I just showed. We had that trend line there, and that's something else to watch. So here's a pretty well-defined trend line. If this trend line breaks and we get a daily close below it, that might be a sign that this little pullback in the market, the correction is over. But as of now, we're trending up, and you can see pretty nice resistance level. We popped there a couple times over this level on the VXN. That line's about 1863. I could even move it a little higher if I wanted to. We'll call that 18 or 1915 or so. But if we break above that range, we're probably going to pop up here at about the 23, almost 24-ish level. That's just a rough guide. And the VIX, let's look at the VIX. Remember, in the S&P 500 or yeah, the broad market, and this is the CBOE, the typical VIX that measures volatility in the broad market. You have a collection or a combination of all different stocks, defensive issues, utilities, blue chip companies, other things that financial stocks, which the Nasdaq, or at least the Nasdaq 100, doesn't have any. And so it's a more diversified index. You've still seen a trend up now. Don't get me wrong. Volatility has bottomed, at least as of July, and has in the near term been trending up. And if you look at this, there's a pretty significant resistance level there around 1632, and had my next resistance around 1755, and this is where I expect to pop up to if there's more to come, if there's more downside in the markets. So if we take out the recent lows in the market, I think we'll see a quick swoon down in the market and a quick pop up there at about 2388. And if not, we're going to see volatility abate again and come down to the, historic low end of the range. Right now, we're pretty much at, excuse me, I hit the pause button on the video, low end of the range. So, if you're a volatility buyer, you got to be careful. Timing's got to be right on trading volatility. And confirm that with the broad market, but you can see a lot of support right here we've come down to, and this is the lowest end of the range. If we get back down there again, well, that probably means the market's at or heading to new highs. Okay, something else, another one to watch. Put quite a few updates on this because I really liked this one at the time of entry, and I don't know if any of you caught it on the front page. Just what was it, Monday? Yeah, today's Wednesday, was Monday. Member had asked if Snap was a buy on the pullback, and I said certainly if it, coming back down, if it gets close to slightly above that 1331 support level, and again, that's a level I had on my chart before. Said it would be a buy. The stock hit 1335, a low of 1335 that day, which is perfect. That's 4 cents above. Like I say, if I'm going to buy a pullback to support, I'm not going to try to get greedy and milk every penny because the buyers will usually step in early. So that was a perfect buying opportunity there. And from that point, in just one trading session, the stock, well, just say from where we're at now, it's continuing higher. It's already up 10%, so not a bad trade. If you recycled back into that one, and if you're still holding it, it looks good. That's why I'm doing an update, because now we've taken out Monday's reaction high. I'd like to see the 60-minute candlestick close above that level, and if so, that would be a bullish technical event, taking out a previous reaction high, and that opens a door for a move up to the next target at 1515. The actual resistance, just so you know, is at 1521, because I always set my price targets below the actual resistance level. And for now, this is still the final target. But as usual, each target is a level where a reaction is likely. I can see some little bit of divergence forming here on the 60-minute. That may get taken out if we get there. It's hard to say. I'll have to look at the charts, 15-minute charts. Yeah, I don't know. I don't know if we'll get a pullback there or not, but probably a little bit of reaction, give or take, around that 15, 20-ish area. And this will still be the final target as of now. It's possible I may lower the official target shoot for the bottom of that gap, because there'll be a lot of eyes on that resistance level, and probably a lot of sellers, especially those locked up in the IPO. That's probably where they're going to look to unload, so I might revise that final target down a little. And finally, let's just wrap it up here. I wanted to keep this video short. Just a quick update on the wheat trade. As you know, we've traded wheat mostly on the long side, catching these little pops, and it's now testing getting close to our stop. I'll leave the stop as is. Not happy with the way this trade is acting so far. But with that being said, the stop is still on a daily close below 640. Yesterday we managed to close just above it. We had a big red candle and we closed at 642. We're currently trading around there. 60-minute chart. You can see what's happened here. We had the divergence and we still have divergence. I'm going to show you. I'll show you the chart of ZW wheat futures in just a second here. We're just walking down this price channel, and I still fully expect a reversal in wheat soon, and I think it's going to be pretty powerful. I think we'll come back, regain that 669 level, take out the top of this price channel, and head on up to any of these targets. But we're not there yet, and I'm surprised the charts are. Let's see if I can find you ZW here. Here it is, CW. These are wheat futures. Probably cut that chart's probably cut off here. The screen capture is only catching part of my monitor. Let me resize this chart for you, and we'll show you that, and then we'll wrap it up. Okay, there it is. So you can see I might have slightly modified this downtrend line, but you can see the bigger picture in the 60-minute chart of wheat futures is this bullish falling wedge. You can see the clear divergence. Yeah, I pointed out here we had a divergent low. We went on to make a lower low, but it's still just an extension of this divergence. Now we have really what I call double positive divergence. Um, However, I'm not happy with the way wheat's acting. We broke out above the trend line there. There was no follow through, no volume or anything. We limped and fell back down. We broke out again this morning, and now we're back testing. So again, this is it. This price action. Um, I'll tell you, it wouldn't surprise me on some of these commodities lately. We've seen what looks to appear to be strategic stop running, stop raids, where they take these things down to just below technical levels where stops should be set, and then just to see those stops cleared out and then a big reversal. But with that being said, loss mitigation is paramount in trading. I'm not going to extend that stop. We'll keep it as is. Again, on the ETN wheat, WEAT, that's a daily close below 640. So this thing needs to giddy up today. Otherwise, we're risking being stopped out. And if they do that in the charts firm up, whether it's a day later or a month later or a year later, I always keep a close eye on these commodities, and we can re-enter that trade. All right, let's stop it there. If anything else stands out, I'll point it out in the trading room or on the front page. This has been Randy Finney with Right Side of the Chart.